morning, everyone. Good morning, good afternoon, good evening, wherever you are. How's everyone? Can everyone hear me clearly? Hey, David, nice to see you. I'm doing good. Right, had a really long weekend. Not so much of a long weekend, but a really fun weekend with the kids. So a bit tired, but yeah, all good, man. I stayed up to watch the Manchester United versus Fulham, a quarterfinal match. All right, so yeah, it's better than last week when they just lost 7-0 against Liverpool. But yeah, Leandro, nice to see you. Precious, Signal Mark, right, from Germany. All right, so it should be about what 8 p.m., 9 p.m. Oh, it should be about 9 p.m., 10 p.m. there, right? We got Temim Kosi, right? Got Yosei from Berlin. Nice to see you. Yeah, a good time, Robert. Yeah, Christy, Peter. Nice to see you in Kenya. I got powerful dragon. It's evening for you. If it's evening for you, means yeah, it should be somewhere in Europe, right? Yeah. Stan, yeah, from United States, or Signal Mark from 10 p.m. That's the perfect timing. 10 p.m. Right. It's about 5 a.m. here in Singapore. Yeah, so if you're from Asia, right, it's about 5 a.m. Right? It's a bit unearthly hours, right? Yes, if it's Sydney, it's about 8 a.m. Okay, Fayez, nice to see you. 11 p.m. or Lithuania, oh, nice, good stuff. From Norway, okay, good. Really good to see a whole bunch of you guys tune in. Hey Moss, nice to see you. Right, today's session, right, it's a weekly session, right? Weekly session, live pre-market analysis, right? So I think it's fun, right? We actually look at what's going to happen to the markets, right, for the rest of the week. We take a slightly longer term view, right? And I think because we're taking a slightly longer term view, we kind of look at the 1 day time frame, like the D1 charts, right? We don't jump into the H1 charts right away, but we look at the D1 time frame, and we usually are pretty accurate in our forecast, especially from last week. Oh, sorry, excuse me. Yeah, it's a bit cold here today. Hey, Tariq from Norway, good stuff, man, good stuff. Okay, got Romania, North Macedonia, right? Peter from Germany, right? Okay, good stuff. Thank you for tuning in nice and early, guys. Today's session, it always sets the tone for the week, right? It sets the tone for the week on what we should expect from a fundamental perspective, what the key news events to look out for. Yes, this week should be as crazy as the last week. I think one of the big things that we caught last week was actually for last few weeks, is that we caught the drop for dollar franc really nicely, and then we caught the bounce for dollar franc, right? And a lot of really nice movements that we're seeing over the next few weeks. All right, Watson, nice to see you again. All right, and okay, Salim from Oman. All right, I don't think anyone's from Asia over here. It sounds like most of you guys are tuning in not from Asia. All right, Moss, yeah, thank you very much. Yeah, I did pass the prop trading test. Right, I think there are two phases, right? I just took the first phase. It's kind of funny, right? I did you have 30 days to pass it. I traded for like the first 5 days, then I got too busy refreshing my whole trading team, right? And only the last 5 days, then I suddenly remembered that, oh man, I better try to get back to it, right? So managed to hit the target. I would think more realistically in 10 days instead of the full 30 days. All right, Norbert, thank you very much. Right, yeah, the analysis last week was great, right? The week before was great, and the week before that was also pretty great, right? What I like to do is like to hold myself accountable to everyone. We will review what we did, what we analyzed last week, right? Might have got some correct, might have got some wrong. I think the one that I wasn't that the move that didn't play out as nicely was Kiwi dollar. I was hoping that it kind of dropped down, but it's kind of still staying there, right? But apart from that, from last week, I think everything else is pretty good, right? We will start reviewing that in a bit. But yeah, just to let you guys know a little bit more, remember, let's begin the webinar, right? Today's webinar is educational in nature, right? So nothing should be construed as investment or trading advice. You know, please do your own little due diligence before you guys trade, okay? And for those of you, and for the agenda for today, right, we kind of take a quick look at the key news events for the month, no, for the week ahead, right? I think the key one will be the interest rate decision, right? And then we'll see, you know, what are the possible impacts it has, right? Our analysis is a lot heavily focused on the technicals, right? It hasn't failed us, right? It has got us really really good forecasts. We look at the majors, right? I actually look at the cryptos, the FX majors, gold, oil, right? So don't worry if you have a request later. I will cover the FX majors, gold, oil, crypto, mainly Bitcoin and Ethereum, right? Because there are big movements on the crypto front last week too, right? And then we look at a few of the S&P, NASDAQ, the DAX, right? Those two guys in Germany. Yeah, those are a few of the good things we'll take a look at. And after that, if you have any more time, if we have any more time, you can send in your requests and I'll do my best to look at them together. All right. Yeah, Milu, nice to see you as always over here, right? Without fail. Yeah, good to see you here, man. For those of you guys who are not familiar with me, I'm introducing your host for today, right? My name is Desmond Leong, so I analyst here at IC Markets. I run the award-winning research firm, Everest Fortune Group, and also the Forex Army, right? So we are finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research, right? So we usually work with the major financial institutions to help them forecast where the markets are heading. But we have a special partnership with IC Markets where we are bringing you guys the good stuff, the juicy stuff, the stuff that really take your trading to the next level, okay? So I also built a whole bunch of indicators in EAs over at the Forex Army. You want to follow me on Instagram, you can find me at Comfy Desmond, right? Nothing much over there, just me, my cat, my kid, and my wife, right? I have less time to play FIFA these days, right now. And that's one of the universal truths I realized when you become a dad, right? Is that you just have less time to less time to play games, right? Kanemba, nice to see you. Thank you for tuning in without fail every week, right? Let's rock and roll in today's session, okay? All right, so let's begin today's session. Where am I? So let me put it out over here. I have the chart. So one thing I like to do is I like to click on this, right, to YouTube IC Markets, right? Actually, I should do it over here. YouTube IC Markets, right? All right, yeah, here you go. All right, so we're watching live over here, right? A few places that, you know, I have noticed some questions come through on where you guys can turn to. If you have other questions on the techniques we use in the analysis, I do want to click on this thing playlist. You want to go to this particular playlist called IC Market Webinars. I need to point you to the correct one, right? Nope. Yes. Okay. In-depth support and resistance, this part. I'm going to copy a link address over here. I'm going to paste it over here, right? Mustafa, is it Mustafa? Yeah, Mustafa. We're going to look at pound dollar later, you know, along dollar yen. So we could look at pound yen in a bit. Okay. Right, guys, please take a look at this. And of course, correlation, right? You'll notice that I start to do a lot of correlation, right? When I am when I'm looking at DXY, I look at how it affects euro dollar, how it affects dollar franc, you know, how it affects pound dollar, you know, how it affects Aussie dollar, affecting Kiwi dollar, right? So I look at a lot of correlation. It helps me map out what we expect in the market a lot better, right? And I think, yes, this part over here, I use Fibonacci extensively, right? So if you can, please visit this part, right? go through retracement, extension, expansions, projections, right? It gives you a much better understanding on how I set up how I set up the analysis every day, rather every day, every week. Okay. Another place that you want to take a look at is definitely icmarkets.com. For those of you guys who want to know our day-to-day view, right? You want to go to IC Markets blog, okay? And we have the day-to-day fundamentals and day-to-day technicals, okay? Under technical analysis over here, I'm going to copy and paste. Usually, on Monday, I will send you guys the 1-day time frame, D1 time frame for what we expect for the rest of the week, okay? Then on Tuesday, Wednesday, Thursday, Friday, I update the site with H4 4-hour view, right? So in coming here, you can see the 4-hour view on what we expect, right? What I expected on euro dollar, no, DXY euro dollar, pound dollar, all of it is over here, okay? So yeah, on Mondays it's the slightly longer term view, D1, and every after day on Tuesday, Wednesday, Thursday, Friday is the H4 view, okay? So please, those are the few important links that I want to kind of point you guys to, okay? Now I'm going to close this part off, and the first place I want to send you guys to, right? If you ever want to figure out what is the few key news events to look at, right? Definitely Forex Factory. What you will notice, right? So once you come here, what you notice is that I'm going a little bit more to the basics over here, right? You want to see, right? You want to see if you see a lot of yellow events on the day, right? Yellow, orange, red, right? In that hierarchy, right? So usually there isn't, you see a lot of yellow events here, right? There aren't any high impact news, right? Personally, I'm just looking at this. There isn't any high impact news that you kind of want to keep your eye on, right? I think from a technical perspective, gold is approaching the 2020 and 2022 highs of 2070, right? This is mainly because of the run to safe haven assets, right? And it's mainly also because of the rescue packages for the central banks, right? So we know the whole team last week, right? The whole team last week, as a whole Silicon Valley Bank chaos, there's Credit Suisse chaos, right? A lot of other banks are being shaken up, Signature Bank, right? And of course, right, when there's a shake-up in the financial industry, especially the banks, which people are supposed to put their trust in, right? A lot of people start withdrawing money, and where do they put their money, right? They put their money with gold, right? Everyone's like, okay, if the world goes into chaos, right? What is the one thing that I retain its value? Is gold, right? Some people, and that actually, some parts of it actually affects the cryptocurrency, right? Because now you're finding some people call crypto was meant to be digital gold, right? Part of the bigger play around here, right? Like Bitcoin, Ethereum, they were dubbed we have gold, we have black gold, which is oil. We got digital gold, which is like crypto, Bitcoin, Ethereum, right? So naturally, even though crypto is not seen that much as like a safe haven asset, right? Because of its limited quantity that it has, there's a fixed number of Bitcoin that can ever be mined, right? It is actually looking slightly more, what's the word for it? Attractive, right? Because not only from a digital gold count perspective, but also, right, from an inflation perspective, right? Crypto was created to fight inflation, right? And even more so now, all these bailout packages, or extra printing of money that's required, right? It just, puts crypto in a better light. Okay, just let me, I only have 2 screens here, so I just need to make sure that I'm seeing everyone's question. All right, yeah, if you have questions, guys, just feel free to send it through. I'll do my best to get to them, right? This is a part of the session where I just talk a little bit about the fundamentals. Okay, Tuesdays, the key currency that you're gonna expect a lot of movement from a fundamental perspective is the Canadian dollar, right? The 3 things, of course, CPI, median CPI, and trim CPI. Okay, right? I mean, it's I won't dive too much into it, right? But this is definitely one of the things that you want to take a look at, these news events over here, right? If you come into Forex Factory, you can actually click on the timing over here and ensure that the timing is adjusted to your timing. Okay, so of course this is in Singapore now. Yes, that's right. It's 5:16 a.m. It's I'm probably the only person awake in my block right now. I think. Yeah. So yeah, you know, it makes be sure to ensure that, you know, the timing is correct. Okay. So for in Singapore, so 8:30 p.m. On Tuesday, we expect this bunch of CPI news coming out. Right, so yeah, it's it's hard for us to kind of forecast what is the exact CPI value, because that will be more towards like econometrics, where we actually try to forecast the CPI value, right? But the key thing to take note is that if the actual data release matches the forecast, then, you know, we should be expecting CAD to drop. Okay, Wednesday, right? This is the key news event, right? Pound CPI year on year. Right, you know, it's year on year for UK is you know, forecast is 9.9%. Previously was 10.1%. Right. My notes over here is that, you know, if it comes in at or below the predicted value, you know, inflation is likely to start to cool off in the UK, although it kind of remains high compared, you know, to historical events. This could lead, you know, to decreased demand for the pound, as it may signal a pause in the rate hike path, you know, for the Bank of England. Right, so this is the one of the key things to kind of look out for. And of course, right, you notice that, yeah, Tuesday and Wednesday rather light on the USD news, because there's a lot that we need to focus on Thursday. Right, Thursday is the biggest event day, you know, for the week. Actually, Thursday and Friday, if you look at it, Thursday and Friday, really heavy, a lot of news events to kind of look out for. Right, just let me ensure that oh, where are my charts? No, wait, give me a second. Okay, coming back to here. Okay, so I need to toggle between the screens every once in a while to ensure that if you guys have any questions, I'll be able to get to them. All right, Thursday. Okay, this you want to focus on, right? The FOMC economic projections, FOMC statement, and of course the thing that everyone's looking at, you know, the federal funds rate. Okay, everyone's kind of expecting it already to increase interest rates by 25 basis points, basically 0.25%, from 4.75 to 5%. You know, but right, I'd say the big little sorry, it's weird to use the word big little, right? But the thing to consider here, yeah, is there's now this banking crisis, right? And it's kind of like a recovery, right? And kind of still in question, right? The central bank is unlikely to provide any surprises, you know, on the upside. You know, so the traders will mainly look for signs of dovishness, you know, from the accompanying FOMC, you know, economic projections, and of course the FOMC statement, you know, especially in light of the recent rescue measures. You know, if the rate hike from the Fed is signaled to slow down, right? Finally, right? The USD will likely decline. Okay, so one of the key points to take note of for this, you kind of want to not only check out a federal funds rate. If you guys are looking at the news, right, you definitely want to see what's the economic projections and the statement. Okay. For the CHF, all right, I think the few main ones to look at, of course, you know, the policy rate is definitely one thing to look at, right? The press conference, monetary policy assessment, important too, right? Same thing, you know, Swiss National Bank kind of expected to increase it from 1 to 1.5%. You know, a few things to take note of is that, you know, a concurrent kind of hawkish stance from the monetary policy assessment and the following press conference may lead to the franc, you know, appreciating, you know, getting stronger. You know, while dovish tone may depreciate it, right? Few things. I don't want to spend too much time focusing on this, right? A lot of it we kind of need to it's pretty self-explanatory, right? GBP official, you know, bank rate for increasing by 25 basis point, 4.25%. You want to keep an eye on this. Okay, same thing, you know, keep a lookout for the, you know, hockey stance or dovish stance. Then of course Friday, right? Friday, all these flash services PMI, right? I kind of won't really focus on the French flash on the flash services PMI from the French, right? I will definitely focus more on the German, right? Let me see. I have my notes over here, and of course the USD, flash manufacturing PMI. These are the few things to kind of take note of for this week. Okay. We spent a good 20 minutes on fundamentals, about 10-15 minutes on fundamentals now. I kind of want to look at my next favorite thing. Okay, that is the part where how do I go here? We start looking at what we forecasted last week and what we expect is going to happen this week. Okay, so let me go back and forth between this, and I got this, and I got my calendar. Okay, so right, my handy dandy charts over here, right? You always notice that I have my chart set up this way. I got crypto, and then I got all the I got all my analysis kind of set up over here, and I got the majors, I got the commodities, I got, oh wow, look at that. I got the indices all set up over here, followed by the different crosses. Okay, now let's begin with what I think is one of the juiciest setups for the week, and I kind of set it over here. I'll break it down to you guys on what I expect to happen. It's perfect. It's on first resistance now. I'm going to sell the crap out of this. Okay, let me see. I can make a copy for this for you guys. Make a copy. There's IC pre-market analysis. Okay, so this allows me to really mess with the charts a little bit, so that I can present to you guys a little bit better. So I just need to remove something. This watermark is irritating. Okay. Now, let me show you what I expect on Bitcoin. Okay. Bitcoin moving up to here. If you're just looking at it like this, you're not going to notice much. Okay, guys, you're not going to notice much about Bitcoin. You feel like it's going up and it's going up, right? However, I want to let you know that Bitcoin is on a major resistance, on a super major resistance. My view for Bitcoin for this week is that it's going to drop. Why? Let me share with you. Okay, so the trick to this is that you kind of need to go on the higher time frame, right? And look at the higher time frame, and you draw this Fibonacci retracement from the top all the way down. What do you notice, right? A major 23% Fibonacci retracement is lining up exactly where price is. Okay, in Elliott wave theory, right, the 23% Fibonacci retracement is the first Fibonacci retracement look out for, not the 14, not the 13%, but actually the 23.6, because if this level is broken, right, we should see a much bigger correction to the upside, a much bigger move to the upside. Now, 23% by itself it's important, but what I actually really like about this is this resistance over here. This resistance over here. This level, right, if I really want to pick it exactly where it is, this level, the 28,600 level, right, was where the previous big support turn resistance level was. You got to imagine it this way, right? In June 2021, price bounced off this level very nicely. Came down, it tried to bounce off, it failed, there's a little bit of fighting happening over there, and it finally broke. So a lot of people who were thinking that price is going to bounce from here, because after all, it did bounce from here so nicely, right? A lot of people who are thinking that price is going to bounce from here, right, has been taken on the right, and they're holding on to their long positions, right? What happens when price reaches here is that they will close up their positions, they will go flat. they'll, in order to go flat long positions, you need to sell Bitcoin, and that is where you usually see this kind of movement occur. Okay, so this is one of the reasons. This is what I call a pullback resistance. Okay, let me just change the color of my. Is there a way I can change the color? Change this color. The pen. No. Oh yeah, I'm gonna change this to black. Right. Yeah. So definitely this level I'm looking at, and what I like is that it's not only a 23.6 retracement, but it's also a nice pullback resistance over here, 28,600. All right. So without even, let me just check one more level. I realized I forgot to check it. It might be here. Might be 38 to 50%. There we go, 38% right there. Okay, I'm going to leave 38. I'm going to leave 50% over here because this is actually what I feel is one of the clearest setups for the week. But yeah, the 38 and 50% are right over here. Right, we can see 38% retracement, we got 23% retracement, we got pullback resistance, all testing this level. And it's not just like short-term Fibonacci retracements, but they are major long-term Fibonacci retracements, all lining up over here. So it's going to be an interesting week for Bitcoin. I expect a reversal from here. I mean, personally, I hope for Bitcoin to continue rising, right? But it is facing, from a very purely objective point of view, it is facing a pretty big resistance there, right? The next one that I'm going to highlight is probably over here. This will be the next resistance level. Now, this is what I call a top-down approach, right? It's important not to look at the chart like just the 1 day time frame or the 4 hour time frame and just try to figure out what's going to happen, because if you looked at just the 4 hour time frame, you're going to look at something like this, right? And you're going to say, wow, price is in a bullish trend. We should continue to expect it to rise, right? And this is the danger when we are just looking at charts that way. Okay, on the lower time frame, right? You kind of need to go into the higher time frame to realize that, wow, this level, most people, they're just looking at this and they're like, yeah, we expect prices to continue to go up. The trend is your friend. Play it in that direction, right? They don't realize that it is at a super big resistance now, right? And that is the benefit of higher time frame analysis. It allows you to not be blindsided by these movements. Okay, so 28,600. Just let me pull out this. I'm going to erase my brushes. I'm going to remove this, and remove this. All right, so right away I know that 28,600 is a level, and you have noticed that price has started to reverse from there. This would act as my first main resistance, right? First main resistance, right? And the next level is over here, right? I want to put it exactly at 50%. You want to be safe, you can put it at the overlap, right? But yes, somewhere about over here, and I'm going to highlight this whole area. This would be my second resistance. Right, I'm going to highlight this over here. Big news, as in this is a very big week, right? A lot of crazy movements, like some of you guys mentioned, is going to happen this week. And this is the key level for crypto, the key level for Bitcoin, right? And we're going to put this as the second resistance. We expect a reversal from here. And where could price reverse to? Price could reverse back to here, right? Very nicely back to there. Okay, now I never ever kind of play a move too far away, right? A lot of people can be saying, wouldn't you put price down here? Wouldn't you expect price to reverse all the way down to there? No, right? I mean, it could happen, but remember, a lot of things can happen in between, right? Where's my brush? A lot of things can happen in between. The price might reverse down here, it might bounce, it come down, it form a different movement over here, right? With a new little support level over here, right? And a lot of things can happen in between. In trading, right? In trading, we play from one resistance to one support, and one support to one resistance, right? That keeps things within our locus of control, right? So if I were to give an analogy to you guys, right? If we have a weather forecast, for the end of the week, what do we want to do, right? We want to we will not trust the weather forecast that much if it says that in 5 days time on Friday it's gonna rain, right? You'll be like, it's a little bit far away, right? So many things can happen in between, right? But if the weather forecast tells you that in 1 hour it's going to rain, then you believe it a lot more. In trading, it's the same thing. You want to forecast it and you don't want to put it too far away. You want to say that I'm going from the first resistance to the first support. I don't want to go from first resistance to first support, to second support, to third support, to fourth support, to fifth support. I would not say that the price will come all the way down to this level over here, which might be like the third or fourth support, because there's so many things that can happen. You got Monday, Tuesday, Wednesday, Thursday, Friday, that can happen in between, right? From, right, that you can, you want to only forecast it to your next area of support, okay? So in this example over here, like I'm showing you guys, right, we are really going from this level down to this level. I can say with enough confidence that this is going to happen, okay? And how you, this is the benefit of a higher time frame approach, because once we have the idea that Bitcoin is dropping for the week, right? Why do we use the D1 time frame and not the H1 time frame? Because if you use the H1 time frame, it's only going to drop for the next, if this chart is on the H1 chart, right? That means with this forecast, we need to every chart for the rest of the week. If you want to use what we have learned, what we have established, we need to look at it one time frame lower. So end up looking at like the 15-minute chart. Tariq, nice to see you. So 1 day time frame, our view on crypto for the rest of the week is bearish. Okay, unless it really breaks this 28,600, but I expect a reversal off here first, because it seems to kind of pause here for a while. It's an overlap resistance, it's two major Fibonacci levels, right? We should expect price to pause here for a while, minimally to kind of just drop to this level. Okay, then from here, once we've established that, we can go into the 4-hour time frame. Right, we can go into the 4-hour time frame, and then we can look at entries, right? So I might look at entries like I don't know, right? Over here, I have a trend line over here, and each time it breaks, right? Each time it breaks this level, this is one support level, I play it down to this support level. Once it breaks that support level, I play it down to this support level, right? So you kind of want to play the in-between movements. Once it breaks this, then you play it down to here. Then it bounce, bounce, bounce. Once it breaks this, you play it down to here. But you can only establish this once you know what's a higher time frame. What's the view on your higher time frame? Because then you are using a top-down approach. Gives you a much higher chance of getting things right. Okay, it won't be 100% chance, but once you've established that, you have your higher time frame bias. It gives you a much, it allows you to trade with more direction on the lower time frame. Okay, so D1 time frame for crypto, for Bitcoin, we expect a drop below 28,600 to 25,255. I believe this could be the 23% retracement of the entire move. I'm only eyeballing this, but there we go. The 23% of the entire move is 25.3, right? So price, it is the first Fibonacci retracement. It is a very nice overlap support. Desmond, why do you keep drawing this overlap support, and how does it work? Really simple, right? You can see over here, price bounced off this level, it reacted off this level, it reacted off this level, it kind of reacted off this level. So this is what we call overlap support. Price responding multiple times to this level, right? So it's a magnetic level, and hence price likely to come down here and respect it too. Okay, so that is what I mean by overlap support, overlap resistance levels. Okay, Ethereum, kind of like the same thing, right? So Ethereum over here, I'm gonna share with you guys a little bit clearer what I expect. Okay, for those of you guys who are interested in Elliott wave structure, okay, I am seeing something like a 1, 2, 3, A, B, C, irregular 4, and a 5 movement that ends up over here. What is the wave 5 target? Wave 5 target is usually from here up to here, down to here, right? 61.8 projection is just about there, right? So that is what we expect on the Elliott wave structure front. You will notice, for those of you guys who are very familiar with the Nike tick strategy that I have, right? You will draw a Fibonacci extension that comes all the way down to here, and you pull up the 127%. You notice that price exactly touch right? Came all the way down. It came all the way up here. Price exactly touched 127 before reversing, right? And depending on how these things are, actually formed, you might see we call it a tweezer top kind of formation over here, or some kind of bearish reversal kind of pattern over here. Okay, now resistance wise, yes, definitely I'm looking at this resistance over here. A lot of rejection from there, right? This nice little swing high resistance, as you can see, price seems to be failing to break past it. I'm going to highlight this entire area over here, right? This entire area as a resistance level we can play a reversal from. What I really like about this is that this resistance is exactly where Bitcoin is facing the resistance from. Okay, both of it are facing major resistance, right? So in terms of correlation, like I always try to explain it, cryptos on resistance, Bitcoin's, right? Bitcoin's on resistance and Ethereum is on resistance. You've got two levels on major resistance, okay? Meaning that from a correlated point of view, we should be able to see a drop here, all right? The next, I think, next key resistance level, it's probably about over here, all right? Not too crazy, right? It's a simple second resistance over here, right? But for what we want to definitely take note is Ethereum's on resistance, Bitcoin's on resistance. Both of them are on major resistance, so there's a good chance that we might be seeing a reversal on Ethereum too, right? We could see it reverse. We could see it reverse down to this support level over here. These are the key support level we're looking to play the reversal down to, right? For Ethereum. Okay, if it breaks this level, you could expect it to drop even further, but this is a little bit far away. Okay, I'll probably just play it down to this level over here, right? About the 1455 level. Okay, now let's power through the rest of the charts, right? Crypto, remember, bearish for the week. Let's hope that we got it right. Being very wary of time, because I do want to try to have some time to go through some of the requests that you guys have. We've been calling a reversal below this 105 level on below this 105 level for quite a while, right? I think if you go to the IC Markets YouTube, right, just really quick pre-market analysis, even if you go to the one that is 2 weeks ago, right, even the 26th of February, right, I think we've been calling that reversal already. Sorry, it's on crypto. Look at that, you know, the 105 level, right, 105.43, we've been calling that major resistance for a while. In terms of Elliott structure, you know, that this was kind of what we were looking at, right, a reversal from 105, right? We've been looking at that, we're looking for it, you know, been looking for a reversal from the 105.56 level for a while, right? And of course, right, we have been able to call the reversal from there. You know, we're able to call the reversal from here, 105, to come down. It has reversed quite nicely, and we continue to expect it to be bearish, right? There's a little bit of bearish divergence versus price versus stochastic. You can see divergence, right? There's lower highs coming in over here. So for the rest of the week, nothing really major change over here. We should expect the dollar to weaken. Okay, so that establishes our view for the week. Right, there isn't a key support level to kind of look at over here, right? I think maybe if you want, on the shorter term time frame, you might be able to find a little bit of overlap support over here. If you want to find like the key support level on the shorter term time frame, right, it could be somewhere over here. Okay, I'm gonna highlight it to you guys that this is the level that you kind of need to look out for over here, right? If price breaks this, you can expect it to a further bearish acceleration down. Okay, key view for the week is that yes, dollar index bearish, right? So you know, dollar strength is bearish, right? If we do want to find a trigger level probably this area over here, right? It kind of needs to close below this entire area, right, to trigger further bearish move down. Okay, now let's go into the euro dollar chart. Okay, euro dollar chart, I think we have been calling a bounce on euro dollar for a while. again. Where's my... here it is. Yeah, I think we have been calling a bounce on euro dollar for a while. There you go. You know, we've been calling a bounce above 1.0478. As you can see over here, above 1.0478. I think what has happened since then, right? 1.0478 is over here, right? Price has continued to bounce quite nicely, right? Bullish divergence versus price, same thing, bullish divergence. And what I like about here, and this could be one of the telltale signs, I'm going to show you guys over here. I'm going to zoom in. You will notice it's a little bit hard to see. I'm going to zoom in over here. Price forms another low point, okay? Price forms another low point. So you have a pretty strong bullish divergence. You have a bullish divergence that does not only occur across 1 point, 2 points, but you have it happen over 3 points. Okay, that's the same thing here. You know, you see stochastic 1, 2, and 3. All of it is kind of going upwards, right? It's going upwards over here. And this is going down. So you have an extended divergence, which to me is always a very good sign that we might be able to see a nice little bit of reversal over here. All right, so we have a nice bullish divergence over here. Okay, bullish divergence, and we are out. So bullish divergence, let me see. In terms of price, nothing to do with Ichimoku. Nice ascending trend line, nice overlap support, nice 38% retracement. Right, we should see price continue to inch up towards the 1.0478 level, right? 0778 level, right? So that's what I like about it. You know, we're expecting a drop on euro dollar. We're expecting a drop on DXY. We expect a bounce on euro dollar. Okay. Now we go to pound dollar, right? Pound dollar, we have established the 1.1847 level as a key support level for a while. It has failed to break that level. It doesn't look like it's going to change much, right? Major resistance over here, major support. I would dare say that we are in a little bit of a range for pound, right? That's my first support. This will be my second support. We're in a little bit of a range. We can expect prices kind of just bounce and react, and bounce and react, bounce and react of these levels a little bit more. No clear direction on pound, okay? So that's the truth, right? Sometimes setups are really nice for us to look at. It's very easy to play. For like, you know, like Bitcoin, Ethereum. If a setup is good, you want to focus on it, and you want to you want to allocate maybe more risk to that trade. But if a setup is not as clear, you know, we don't need to force something out of that trade. If it's not clear, then you don't trade it. You know, remember, you are trading. The purpose that you are trading is to make money, not to trade for the sake of trading because your hands are itchy, right? It's not to trade because, you know, someone out there is telling you that you need to trade, hit 10 trades a week or something. You're trading just to make money. If the opportunity doesn't present itself, you know, then we don't trade. Yeah. So yeah, you know, movement for pound, not that clear, right? Nothing key to look at over here. Highlighting the key support and resistance levels that you want to look at over here. 1847 and 1.2440 for the first resistance. Okay, now back to here. Crypto, no, dollar franc. We caught the reversal from dollar franc, and we caught the bounce from dollar franc, right? Don't believe me, right? You can actually check it out over here. I think it's this, or is it here? Yeah. I see our view for dollar franc. Where are we? What was the view on dollar franc? Wow, tough. It's about over here, right? We are calling for the reversal for dollar franc below 94.11, right? And since then, what has happened is that for the 94.11 here, it reversed very nicely to the first support. Not only the and what happened after that, right? It's equally important because it's not only important to tell you guys where it reversed to, but after that, right? I think let's see what we did just last week, 6 days ago. We also forecasted a bounce for dollar franc, I believe. Euro dollar DXY. Yeah. Oh. yeah, we forecasted for dollar franc to drop even further to the 90.80 level, which it has dropped, and it touched that level, and from there it bounced. Okay, so yeah, we've been pretty on point for the last few weeks. I expect us to continue to hold these high standards, right? But oh man, what do I expect on dollar franc? It's a little bit of a mess. Dollar franc's a little bit of a mess. You know, bounce, 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 bounce. You know, we have a clearly established area of support and resistance. So truthfully, right, if we expect the euro dollar to continue going up, we should expect dollar franc to go down, right? Because they're inversely correlated. There isn't that clear a view on dollar franc, but my dear, not coming on Sydney server. John, nice to see you in here again, man. I think the markets will probably be open in another 13 minutes, right? So you should hang tight for the next 13 minutes, right? Then once the market opens, you can start trading it, right? I think the market is not open yet. That's why you don't see any things come in. Precious, I'll take a look at dollar yen zoom, right? Dollar franc, if there's any level I kind of want to highlight, just this dotted level of resistance, right? It's a fine-tuned level for overlap resistance, right? A lot of reversals that happen over here previously, as you can see over here, right? So, you know, you could expect a similar kind of reversal and a drop, just like how we expect on euro dollar to bounce, right? Remember, correlation is the key to a lot of, you know, correlation is the key to finding a lot of these levels. Okay, dollar yen, yes, all right, precious, dollar yen. Dollar yen, we've been forecasting the reversal from this level to here. The key overlap remains, right? The key overlap remains at 130.84, right? The key overlap remains at 130.84. John, let me check that out, right? It's the time frame is a little bit messy over here. Okay, it's 5:47. Okay, let me check that out in one bit, right? Let me just highlight the key level on dollar yen first. Okay, dollar yen, right? 61.8 retracement from here to here is the key thing I want to highlight to you guys for this week, right? Price is approaching, fast approaching that 61.8 retracement, and it's important for us to really fine-tune this level and realize that our overlap support, right? Our overlap support is at 131.25, right? Why is this a nice overlap support, right? Reverse, no, bounce, 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 reversal, bounce. So a lot of clear movements over here. We expect a little bit of a bounce for dollar yen above this level. Okay, actually, to think about it, I would watch for this level to be broken. If this level is broken, then we trigger the move down, because we could be expecting a little bit of dollar weakness. No data until 1 hour after the market open. John, okay, thanks for the feedback on that. I will take a look at it. Right, I'll take a look. Yeah. I'm just taking a little bit of notes now. Okay, yeah. I took down notes over here. I'll send your feedback over to them, right, on the Kiwi pairs. Okay, I have it written down here already. Okay, John, thanks for the feedback. Right. Okay, how do I do a thumbs up? I can't really thumbs up your comment here. Okay, Ken. Now, yeah, tell me. Keep us updated on what happens there, right, John? Right. Dollar yen. We expect a drop down to here. Okay. I will wait for price to close below 131.25. Right. So in terms of a trading setup, a potential trading setup you can consider is that this is less of a trade right now kind of thing, but it's more of a breakout. Right. So we want to wait for price to close below 131.25 to then trigger the move down to there. Okay. To trigger the move down to there. So probably what I call a downside confirmation, right? Back in our institutional trading days, you call this downside confirmation. You require price to close below 131.25 to trigger the downside down to 127.08. Okay. Now, Aussie dollar that we're looking at, I do want to highlight this thing on the 4-hour chart. Really nice, really nice trend line that has been broken over here. And on the 4-hour chart, really nice Ichimoku that price has crossed over. And what I like about this is that particularly on H4 time frame Aussie dollar, you notice that it tends to respect Ichimoku really nicely, right? We don't use Ichimoku on all charts, but in this one Aussie dollar respects it quite nicely. What I have noticed is that price has broken the descending trend line, right? Price has crossed over the Ichimoku, and on the H4 time frame, right, if you look at this level over here, price has closed above the overlap, right? The overlap resistance support, right? Yeah, price has closed over the overlap, right? John, right? Yeah, it's I guess you can ask a question here, but try to ask the questions a little bit more on the live chat, okay? Because this is the live trading analysis, right? So you probably want to keep things, keep the questions focused more on the analysis, the requests that people have, right? It's more support-based questions, right? I urge you to ask them in the live support and not over here, okay? Mando, I keep saying that I would, right? And I keep forgetting, but yeah, I will. Timestamps are the next big thing that I will be adding in. All right, John. Yeah, it's your questions. Please ask support, not over here. All right, I urge you to do that. Right. Yeah, I urge you to do that. All right. Okay, GJ. All right. Now let's go. Aussie dollar, right? Key little breakout that we're expecting over here. Right, pound yen. Yes, I will get the pound yen soon. I can see 2 requests for pound yen already. Right, Aussie dollar. I do want to highlight it's a key level over here. Price has broken this on the 4-hour chart. We should maybe expect a little bit of a reversal on the 1-day time frame. What that means to us is that we could see. I'm not going to use the Ichimoku chart on the D1 time frame, but we could see. We could see a reversal back up to here, to the 6886. Okay. We could see a reversal up to there, back up to there. Guys, give me a second. I know everyone wants me to look at pound yen. I'll be looking at it in a bit. All right. Yeah. So key level. Actually, this overlap level is a much bigger level on the longer term time frame too. It actually can be stretched further back. But yeah, if you look at it over here, right, it has crossed over. Right, we should a little bit of we might find intermediate support over here, and price might kind of continue to rise towards the resistance. Key thing I want to look at here is, did it break the 23%? Please tell me it did break the 23%. That'll make the view for the week a lot clearer. Oh wow, if it closes above this 23%, Aussie dollar, there's a pretty decent potential that it will accelerate towards 68.86. Okay, that is a key resistance level that we're looking at. 68.86 also happens to be right above the 50%. So I'm going to highlight 23 and 50% over here. Right, overlap resistance, tweak it downwards a bit. Right, yes, this is one of the setups for the week. Definitely one of the potential setups that we can have for the week. Looking at a little bit of a bullish reversal towards here. Okay, which also means, okay, Yamilu, I will get to that in a bit. Kiwi dollar view is crap, right? It's not that clear. I can't really pick a view for Kiwi dollar, right? So I will kind of skip it. Dollar CAD's on nice acceleration. I do want to let you guys know, for those of you who are trading oil too, right? Dollar CAD, if you go into the shorter term time frame, H4 chart, not yet, Mando. Haven't done gold yet. H4 chart, it looks kind of like a little bit of a ascending trend, ascending like little a trend line thing. Not that great, honestly, but there's a nice little bit of support, and very importantly, very nice pullback support over here. Price, what I mean by pullback support, reversal, bounce. Okay, I might not use the channel. Channel looks kind of crap, right? So we could see a nice little bounce there, and I believe the bounce might be actually testing the 23% retracement over here too, right? So we could see a decent bounce above the 38%, and the move that we could be expecting is at least back up to the first 38.61 level. I won't be too ambitious to call it back up to 39.81, but up to 38.61 could be decent, right? Any Ichimoku cloud? Nope. I mean, yes, but not that great. Nice ascending trend line, continue to hold prices up. Okay, all right. So this trend line that stretches further back, and of course the higher lows that we're seeing, right? You know, higher low, 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 higher low. Right, we should continue to see the higher lows, right, which is the technical definition of a bullish trend, right? Continue to push prices up to 38.61. We're going to jump to gold, right? Going to jump to gold because a lot of requests. Yes, this is my big view on gold, right? My big view on gold is that we should be seeing a reversal from the 2000 level. Let me pick this. 2000 level is the level we're going to see a reversal from, right? Why? Is because of this really nice Nike tick level that comes up to here. Really nice Nike tick that comes up to this level, 1999. If you want to pick, if you want to go for the big figure, 2000 is the big level that we're looking at. There is nice bearish divergence. This is what I call preliminary bearish divergence, right? You look at price and it's an advanced trading concept that I want to show you guys, right? You can see that price is kind of close to a big resistance. Zoom in over here, right? Zooming over here, we can see that stochastic is forming lower highs already. A lower high has been formed, right? This is a high and this is a high. A lower high has been formed, right? Is definitely a higher high is being formed on gold, right? It's coming up to here. 1 to 7%. That lines up with a swing high resistance all the way from April 2022, right? We could be seeing a nice little reversal from here, right? So from a technical perspective, we can see a reversal back down to 1957%. You guys know how I trade the Nike tick, right? Very key Fibonacci extension level at the 1 to 7%, where we can see a reversal from. Right, if it breaks this 1957 level, we can expect a further drop down to here. But just for the week, it's gonna be freaking volatile. It's gonna be crazy, right? A lot of news events are gonna push and shake the market, right? But the key level, I'm gonna look for a reversal of 2000. Be careful because of the amount of noise that we're seeing. We might see a big wick up. Okay, that is very characteristic, right? I kind of really just want to. Right, I really just want to warn you guys over here. All right, it's very, very characteristic of the key levels, especially key levels like 2000. I would say it's almost as much like a, you know, it's a trap kind of thing, right? It looks too nice. The number is too nice. It's a big figure. It's too obvious. A lot of fighting is going to happen. And if you want to know what level price might go to, that is where you use an advanced form of Fibonacci. You actually look to 127,138. There's a decent chance that price might wick until the 138 level. Okay, there's a decent chance price might wick until the 138 level. I don't think there's any Fibonacci retracement you can even use, right? No, there is no Fibonacci retracement you can use. Is there? Is there a Fibonacci projection that we can use? There you go. I uncovered a secret, okay? So if I were to highlight this, right, 2000 is a resistance level, right? But I'll probably put it over here, right? That would be the start of my level, right? I'll put it over here. Yeah, so I might look, if you really want to pinpoint the exact kind of reversal level, you might want to go for the 2016 2016, right? 2016 level, right, which is a 138 and a 61.8 projection. You could begin to scale into the trade, right? Once price reaches the 2000 level, as you can see over here, right? You could begin to scale in. All right. So we got Yose asking, right? But if DXY sell, gold buy? Not necessarily, right? So what you can do over here, right? You look at the correlation. How has the correlation been for gold and oil, right? What you're seeing, right? What you're saying is that you'll say, are you asking if there's a correlation? That means if we're expecting dollar to go down, we should expect gold to go up. Is that the correlation you're asking about? Please clarify, and I'll be able to answer you in a second. Right? NASDAQ. Right? Okay. Not a lot of people have been asking for pound yen. No, this was the view from long ago. Pound yen. We did highlight pound yen to be in a channel. It continues to be in a channel. It continues to give me crap levels. It's not a very nice setup to look at, right? Pound yen. This remains the key support level that I'm looking at over here, right? It's a nice overlap support level, so I might be able to highlight this little bit over here as the key support level for pound, right? But it's not a really great level, right? Key resistance level, just eyeballing it. I'm not going to spend too much time on pound yen because I'm looking at it and I think it's absolutely terrible, right? The charts are not that clean. Charts are not clean. It's very hard to trade, but I do see an overlap kind of resistance over here, right? Reversals, right? So we should be able to see a bounce above 156 to go up and test the 165 levels, right? It continues to be above the, where's my Ichimoku? Yeah, continues to test the Ichimoku, continue to test the bullish trend line or channel, right? So we should be able to see a movement up above 156 towards 165. Okay. Yeah. So the correlation they're talking about, right? So if you're looking at DXY, right? If you're looking at DXY, sorry, looking at gold, and you look at the correlation, right? How do you look at correlation? Click on this, type in DXY, same percentage scale, right? I would say the correlation has not been all that fantastic. I know one goes down, one goes up, one goes down, one goes up, right? Short term, you should be able to expect DXY. The view on DXY is that, yeah, it needs to break this level to trigger down, right? But for gold, right? Right, it could expect to go up a little bit more before going down. Remember, DXY does have a little bit of support down here. So maybe it might come down here and then bounce. But I don't think the correlation is that strong these days, right? How to see how strong it is? I would then use the correlation coefficient. Where's the correlation? Correlation coefficient, right? And my symbol is DXY. Right. I guess if you look at the correlation and -1, you notice that for gold, right, and compared to DXY, the correlation is not always at -1. So I think that's what you're asking about, Yosei, right? You're saying that, you know, there's a strong negative correlation between gold and oil. There is, but look at that, you know, one is fluctuating between +1 and -1. It is not necessarily, they are not like strong negative correlation, okay? What I mean by that, right, is that you can't really use correlation this much in this sense because, right, because, you know, if you look at Euro dollar and DXY, this is what I mean by strong negative correlation. This is the Euro dollar chart. This is DXY. You notice that price moves almost at a -1, almost in opposite directions with each other. This is what I call a strong negative correlation. When you look at gold, right, looking at the movement here, it fluctuates between 1 and -1 is not as strong as a correlation. Dollar franc, you know, strong 1 correlation, I would still say this is possible for a good positive correlation, right? As you can see, you know, it rarely ever goes to -1, right? This is dollar franc, right? But if and comparing against DXY, right? So that's with gold, okay? It's not that strong negative correlation. You shouldn't let it affect your view that much, okay? I'm going to look at US30, which is Dow Jones, right? And I'm going to look at NASDAQ. For my closing, right, this remains a key view. You know, I do like this little movement here. It looks a little bit like a topish movement over here, but this 50% retracement, which we highlighted last week at 31780, needs to be broken. I won't be too worried about a bounce because, you know, there is no divergence over there, right? So there is unlikely to be a bounce, right? I will wait for price to break below this level to trigger the move down, okay? But again, wait for price to break the 31776 level, which is the 50% Fibonacci retracement from here. And last one, I'm going to look at NASDAQ, right? NASDAQ, wow, what's going to happen on NASDAQ? I don't think we did that well on NASDAQ last week. Looks kind of tough, man. This is a nice little bit of overlap though. I do like the market movement here. This will go back to support. This support is a little bit far away. I don't think it's that relevant. It should fluctuate between 12297 and 12905, right? If it breaks 12905, next resistance level over here. I mean, I kind of want to put it here, but it's not that nice. Yeah, but next resistance level will be there as a second resistance, right? And this will be our first resistance. All right. In terms of Fibonacci, I don't think it's that clear. 38% is the key level to kind of look at, and 50%. Okay. Right, yeah, so for NASDAQ, 38%, 12905, price is right at 38% retracement. If it's able to break that, 50% will be the next key one, up at 13,735. Okay, now that's it for me, guys, right? Thank you for staying throughout today's webinar, right? Cross time a little bit more now, right? Starting to see a lot of questions. John, I hope you managed to get your issue sorted out with IC markets, right? I mean, really big brokers, so I don't think they were really there might be anything funny about their price feed, right? So yeah, I hope you managed to get it solved over there, guys. If you found this session useful, please help me smash that thumbs up button, help me like this video, right? Thank you, Norbert, right? Let me just see. I think there is a decent chance YouTube IC markets, right? It's me. You know, I'm not Mario saying it's me, right? But I should be live in about 12 hours, right? So today is the 20th of March, right? So 20th of March, might be Peggy, might be me, right? So if it's Peggy, it's the newest analyst that we have, right? She could be doing today's session with you guys, right? I will check it out. I will see if she's ready, right? But she has passed 4 different prop firm trading tests, right? Really good at trading, right? So it might be her, might be me today, later today in about 12 hours. Okay. Thank you very much, David. Thank you, Precious. Thank you, Moss, Kanembar, Norbert, right? Yamilo. Thank you for staying throughout today's session, guys. This is the link for later, right? This is the link for later. And for those of you guys, oops, that is not the link. This is the link, right? For later, it might be me, it might be her, right? I'll take a look at it, right? It should be me still. Maybe from next week it won't be me. I will check it out. All right, yeah, but I will catch you guys later in 12 hours regardless, right? Help me smash that thumbs up button if you found today's session useful, right? Hopefully this week, we get a lot more of we have got a lot of our forecasts right. Hopefully this week will be a good week. A lot of our forecasts will be on point, right? It's a big week ahead. Tune in later for our live market analysis where I dive into H4 and H1 timeframes a little bit more. Thank you, Yamilu, right? Yeah, Tariq, I think based on the time, go check it out, but it is roughly in 11.5 hours, 11 and a half hours from now, right? That's our live market analysis. Okay, I think I have it. I have a link for our IC Markets Telegram. I'm going to send it over to you guys, right? So please join it. I do try to share as much as possible, and you will know whenever Cassandra, me, Peggy, or anyone else is going live, I will share it in our Telegram chat, all right? But that's it for me, guys. Let's have an awesome week this week, have fun, continue to make some money, right? All right, stay safe, trade safe. Peace out, guys, right? I will see you guys in about 12 hours, all right? Take care. right? And yeah, for those of you guys who are tuning in from Europe and London, good night, rest well. All right, I will probably try to catch 2 hours of rest before my day begins. Oh God, fun stuff. All right, see you guys. Take care. Thanks for tuning in. Thanks for tuning in, guys. It's always a pleasure to have you guys with me. Good night. Good morning, man. It's like 6 a.m. for me here. Yeah, but the sky's still dark, so yeah. Thank you, Tariq. Thank you, Yamilu. Right. Thank you, David. Right. Catch you guys, right, in a while.